If it's a move to symbolize the end, you can't do it in the beginning because I don't think it's the end.
Just a signature move. It doesn't symbolize anything.
Do you like this? Or not? I feel like you're not digging this move.
I like that move.
I think my favorite part is the facial expression you're making. Today we are going to talk about one of our most requested topics for Money Donuts, and I think in general at Royal Credit Union. But before we do that, we do need to offer a little bit of a disclaimer, okay? We are going to talk about investing and the different parts of that. But before we get into it, remember, investing carries a little bit of risk, right? So there's always some risk associated it.
So do your homework.
Do your homework.
That's going to be like the overarching theme of this episode is you need to do the homework, but we'll just talk about it.
Well, but I think too, if we think about, the risk of a certificate, right, or a CD, well, the risk could be having that money tied up when you need it, right? So you have to be in a position where you can feel confident. You don't need to withdraw that money immediately, and that you have some money set aside in a regular savings account to be able to handle those situations, right? And not have to pay a penalty and things like that. Investing 101. Everything we talk about is general knowledge, not advice. You have to do your own research and talk to financial professionals that will help you decide what is best to do for you.
Do you guys remember when you were introduced first, or the first thought of investing came into your head?
I want to say like high school econ. I remember compound interest, Mr. Olson, really hammering that home. I don't remember anything else. I think it was a classic, if you put $5 in now, you'll have $1 million later, and it seemed really great. And then I didn't do that. It's
going to be my experience too, is I remember getting my first real job, and one of the other employees was like, just put something into your 401k, just a little bit, as much as you can, because it adds up. I wish I did that. And then I didn't listen to him.
But now
that's
do.
a lie. That's a lie. I did listen to him, and then I took all that money out years later when I needed it, I got penalized for it, which was a mistake.
Mm-hmm.
I'm glad we brought this up. It hurts my soul. All right.
It's important to acknowledge the mistakes you've made, Stephen.
Well, that's life, right? It's failing and learning from it.
Getting deep now.
Did you guys have your parents talk to you about investing, or did
No.
Wow.
Mm-hmm.
There was like this sense that it was something that really smart people did who were like
Yeah.
really well off. Like, oh, you have to have money to spare to invest it. Kind of.
And I think you have to have a lot of money to spare
Mhm.
to invest. Putting $10 aside doesn't make a difference, but it does in the long run.
I don't think I was really introduced to the term or the concept of investing until college. And even now, I still feel like I don't really know a whole ton about it. And for me, and probably for a lot of others, investing can kind of feel intimidating because there's so many options. And how do you start learning about all the options? Like, where do you even begin?
I think that there's a lot of places we could start with that. So if you want to consider investing, I think a lot of times people's very first opportunity for that is typically when they get their first job, and if they offer an employer-sponsored retirement plan like a 401k. A lot of times, especially the younger people too, that might be the first time they're hearing about it. Again, I mean, you can, if your parents invested, they can start accounts for you, potentially a college investment account too. Could have been something your parents might have used for you. So some people might have a little bit of an understanding about that.
And that could be in different formats, right? That could be like a
Absolutely.
certificate, but then there's like a specific.
Yep. There's like a 529 college savings plan. There's lots of different things. But to, start with, what is an investing plan? I think that having a base knowledge of, okay, you go in, you have that employer-sponsored retirement plan. The point of a retirement account is that you use it very far in the future, right? So we're putting money in it right now, and you're earning a return on it. So interest, however that's invested, that rolls over, you let it sit there, you earn interest on the interest, and it eventually becomes a larger sum, right? So I think sometimes people don't realize that could be your investing plan, right? Is taking advantage and fully understanding that 401k. If your employer matches it, right? So I know at Royal, our employer matches up to a certain percent of a contribution. So if I put in X percent, they will put in X percent. That's a 100% return on your money right there, right? So absolutely take advantage of that. Typically with 401ks, they allow you to choose your level of risk, right? If you don't want to pick your own investments. So I know if I log in, I can say, I want to retire here. I really don't want to take any risk. And they say, here's your calculation. And that's what automatically happens. For me, because of my age, I have mine. Well, I self-elect all of my investments in the 401k. So like I am invested in a specific stock portfolio that I personally choose.
Why?
Because historically it gets a better return than a safe investment, and because I'm young. And so I can, in my personal comfort level, I can be a little bit more risky with my investments because the way I look at it, I have a longer period of time to recover with something happening, right? So for example, my 401k or even just a normal investment account, I have invested in the stock market. Stocks go up and they go down. When they go up, you make money. When they go down, you lose money. For me, being younger and having that long-term view, if the stocks go up, that's awesome. I'm going to make a little money. If they go down and I lose some, not great, but it'll even out over time, essentially, if you look at averages. So, and that's why it's important to kind of understand that there's risk involved, right? And when we talk about investing, you have to be set up to be okay taking that risk or being okay watching the ups and downs.
Sounds good. Yeah. It's all making me very nervous.
Here's the thing about investing. Okay. So savings, investing, so we talk about saving, right? We're putting money aside into an account for a rainy day. The thing about saving is you tend to not get as high of a return on that or earn as much interest, right? Which is the free money, the thanks for keeping your money just at the credit union, right? As you would with an investment account. The thing about saving is savings are typically pretty liquid, right? So you can access them whenever you need them. And an emergency fund, that's what we want, right? We want to be able to access it when the car breaks down or if the refrigerator goes out. Investing is for the long term. That's for the future. To see the benefit of investing, we typically have to set it and kind of forget it, right? Like that's how that works. And with investing, like in a 401k, an IRA, depending on the type, there's usually a penalty with early withdrawal. There's usually limits on there for what you can do with that and how much you can take out. Sometimes it's higher taxes, right? So investing is really personal, right? So I talk about investing and I make my own elections and things based on research that I have done, right? Because that is what works best for me. There are so many ways to invest. There are financial advisors that you can work with. There are people out there who this is what they do. There are robo-advisors. So you don't necessarily have to meet with somebody. That can have a little bit higher fee, typically, if someone is actually managing it for you. Robo-investors, you open an account online, they're robots or AI, and they just kind of invest for you based on math equations and what they are predicting. So there's some like that, which have lower fees where you don't really have to do it. You're, again, kind of picking a risk profile, and then you can do it on your own too. But you don't have to do any of that, I think is the point.
You would say that one more time, that last part.
You don't have to do any of that necessarily, right? You choose what works for you. If you want to invest only in certificates, by all means, do it. That's how my Bampa, that's how he built wealth. Didn't invest in anything else.
Let's have a candid conversation about this. I think that people want the phrase, your money to work for you.
Yeah.
And that's where some of these accounts, like the 401ks and the IRAs and the certificates, is not exactly what people are looking for. They're looking for that individual. How do I work with a financial planner? How do I, use a specific app or to start investing? And I think you have to hire professionals to either help you out with that, or you have to do a ton of research on your own for it to make sense.
Well, and I think
there's risk.
I think kind of changing the idea behind making your money work for you, right? And so a 401k, an IRA, those are making your money work for you essentially, right? So how do they do that? 401k, typically you put money in there pre-tax. You're not paying taxes on the money that you're investing. IRAs can be either pre-tax, so before you pay taxes, so right out of your paycheck. They can also be post-tax, okay? And the reason that those work is you have to look long-term in the future and think, okay, what's going to happen then? So if you're putting money in pre-tax, you're going to pay taxes when you take that money out when you're 65, okay? If you're putting it in after you pay taxes, post-tax, you're not going to pay taxes on that in the long run, right? So you have to kind of look into what do you think is going to increase it. But that, making your money work for you, you're earning a higher return for a longer period of time, potentially saving yourself on taxes in the long term, right? Or in the short term. A college savings account, right, for children, totally making your money work for you, right? So instead of just socking away that money into a normal savings account with a 0.062% interest rate, right? You might be able to put it in a college savings account that's earning 5%. That's going to get you to that goal for your child a lot faster than just that savings account, right? And that one is one, when they hit that age, that's when you can take it out. So that totally making your money work with you. I think investing is ultimately, you're saving less but getting more of a return is, I think,
Potentially.
the goal of it is.
Yeah.
Does it always work like that? No. But depending on how you work, that's how it can be. So then you can work with your financial planner for really anything. They do, from an investment standpoint, they can manage your just stock portfolio, but
Does Enrich have any resources for investing?
so many. Enrich does have a lot. They actually, if you go to the topics and click view all, there's a whole section just on investing. And it has truly a lot of stuff. They even have a section that I think is my favorite about the different financial professionals that are out there. So if you're working with a financial advisor, why would you need one? What do they kind of do, right? What do you need to do before you start investing? Making that financial plan, figuring out kind of what you want, right? So they have a lot of different information out there that can guide you also to some good resources.
That might be a really good place for people to start. If you clicked into this episode and you're like, Steve's not giving you the information that you really wanted, maybe go to Enrich and see, do your own search and see what kind of videos and articles could come up and help you. Because I'm trying to figure it out too. I'm going to head to Enrich after this. Maybe right now. Boop, 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 boop. Sorry.
I know, I'm
fake phone.
looking at, I actually have it pulled up, but they, Enrich for investing, they talk about standard brokerage accounts. They have retirement accounts. They have college accounts. They talk about the basics of investing, why we diversify. They have really everything out here.
And now sorry, to go back to this, I feel like you had once told me that you do 401k plus you've been doing your monthly own investing.
Yep.
How has that been going for you? How do you feel like it's been going?
It's been going good. So the 401k, I take advantage of that because we have a great match rate here at Royal, and I can self-elect what I have mainly stocks or within the market. A market index is what I typically invest in. So I like that. But again, that's for retirement, right? So I'm setting that there for the long term and not really using it. I have just a regular brokerage account that I manage. I use Fidelity personally. There's Vanguard is out there. There's SoFi. There's a bunch of different ones. And I use that one. And that one I use more as I have a very specific goal for why I have that account open. And I put money in there just to get a little bit higher return. But that's one, there will be some capital gains tax that I pay. So if I make a lot of money in that account and then withdraw it, I do have to pay taxes on the money I earned, right? It's kind of like, it's like earning income.
Right.
Okay. But I can take that out when I want to, really without the penalty. So I'm getting a little bit better return in there. I will have to pay the capital gain tax, but hopefully it'll help me reach that goal faster. So people can do that for a lot of things, like houses. There truly is an investment account for everything. You know, if you have a goal to buy a house and you start putting money in now for 5 years later, you know, you can earn a little bit on that. So
I need a house fund for 6 months from now.
see, a house fund 6 months from now, probably investing wouldn't be where you'd want to put your money.
Maybe a 6-month certificate.
Yeah,
There we go.
a certificate. Absolutely. Investing takes time because of compound interest, right? So when we think of what compound interest is, you earn interest. So you have $100, 10% return, you earn $10. Now, if they compound monthly, that next month we have $110. So now we earn $10 plus 10 cents, essentially. So now our balance is $120.10. So now we earn 10% on the 100 and 10% on the $20.10, right? So, you know, you continue to do that over time. It's a way better example when I use 1,000. I don't know why I used 100. But so the longer you let it sit there, you're building up that interest you earned, which means you're going to earn more interest on that, right? So that's why investing for shorter term things, depending what they are, might not get you the best return. Where a certificate, you know what you're going to earn on there, right? Like that's more guaranteed. So it can be a little more helpful. And again, investments are risky. You put all your money in there, it could go away, right?
I have so much to learn about investing. Got some homework to do.
Like, what does investing mean to all of you?
For me, it is right now 401k and then personally dabbling in trading apps,
Okay.
like trading my own stocks, which I don't have that much knowledge on. And I'm just kind of, it's like the Wild West.
Yep.
And a little bit of crypto for me.
So your stage in life, 401k, right? Why is that important to you right now?
Yeah, retirement and all that jazz.
Yeah, right? Maximizing it. Why are you looking at the different trading crypto and trading stocks? What are you doing that for?
More knowledge. I mean, it's less money, so just trying to figure out how it works.
Yeah.
Like a learning tool. And it's a little bit of get rich quick for me. It's like, how can I not only make my money work for me, but make my money work for me as fast as possible? Because that's, you know, what you're talking about is I don't need a new house in 5 years. I wish I was thinking of that 5 years ago. So thinking now, what am I going to need 5 years from now? How do I get to that point?
Well, that's, you know, important too, doing I want to get money quick right now. You have to have other savings and stuff in place, because if you put all your eggs in that basket and the return does not come, that could not be great, right? But if it's just a little bit of money at a time and you're trying to just figure it out, as confidence builds, you can always increase that.
And then my level of risk of how much am I willing to risk and be, which is pretty low.
Yeah.
And I'm trying to maybe balance that tolerance up a little bit. That's the thing is, like you said, we don't know. And I probably should talk to more people or talk to anybody, but I'm a lazy person with
That's
too
what
much to do.
Enrich is for.
I know, and I've been using it.
James, what's investing mean to you right now?
I think there's been so much in the news about the stock market and certain stocks like growing quickly. And there's this sort of fear of missing out almost. So there's this thought that like, well, if you're not at least dipping your toe into the water, that you could be missing something. And maybe it's just like a generational thing. Like once you have some money, you should be doing this. So I think I'm doing the retirement thing, looking at individual retirement accounts on the side in addition to the 401k. But I don't know what I don't know about the other options to some extent. And I also don't know what my goals are for the long term besides retirement. Like, I feel like there should be more to life than just continuing to work and then retiring, right?
But I think, okay, so for you two, okay, we're focused on 401k, focused on kind of what's happening in the market. Maybe you explore those topics, but also you both have children. Now, you know, it's not guaranteed that they will want to do any continuing education, but maybe it's doing a little research on that and trying to figure out, hey, you know, if we're putting money in a savings for them, maybe we could make that work a little bit better for what ideally their future goals are, right? So that's something, meet with a specialist about or research the different accounts. It doesn't have to be a college savings account. It could be like a custodial account where it's theirs, but you're on it, and that's an option. What's investing mean for you right now, Alexis?
For me, I'm kind of just in the discovery stage, I think. I already have some retirement accounts set up. I have a 401k and a Roth IRA. I don't know if it's wise or unwise to have both. It's just something that I'm doing.
It's good to have both. They have different tax advantages.
Beyond that, like I said, just the discovery stage, trying to figure out what's out there. What does it all mean? I think everyone's heard, don't put all your eggs in one basket. Diversify. Well, what do I diversify, and what are my options? What's available to me?
Ooh, should we talk about that?
And I don't have a lot of eggs. Sorry.
Yeah. What if I don't have a dozen? I just have half a dozen.
Well, if we were truly investing eggs, that would be fine, right? Because one egg makes a chicken, which makes more eggs. Okay. Essentially, you're laughing, but that's an excellent investment analogy, right? An excellent one.
I'm ecstatic to learn more.
I love this. When people talk about diversification, right, it's not necessarily accounts. Okay, it doesn't mean having a 401k, an IRA, a Roth IRA, a 529. Like, that's not necessarily what they mean. When we talk about diversification, it means the actual thing that you're investing in, right? So it could be stocks. Okay, stocks are a little more volatile, okay, and it depends on the type of stock. So there are large capital stocks, mid cap, small cap. So there's different levels of stocks too. Startups, there are, there's Google, which has been around forever. Well, you're kind of going to get what you get, right, with that one. You're not, the large companies like that tend to be a little bit more stable. It's not guaranteed. Anything can happen at any time. If you have the small startups, right, people invest in those ideally to make a return. And that's sometimes where you can get a lot of money from it, right? But you also might not, because they're small and just starting out and they haven't figured out what success looks like, right? So that's one too. So even with stocks, you can kind of diversify with those more stable companies and then the newer ones, right? If you invest more in the stable companies and all your little ones crash, well, you're probably going to be in a better position, right? Because all your money is not in that one basket. If we flipped it, you had all your money in those tiny, fresh startups, right? And just a little bit in the big ones. Well, most of your money then would go away if all of those crashed, right? So that's kind of the stocks. So that's one spot that we can diversify. The other part that we can do is bonds. So a bond is usually a debt that is sold by like the government or a business. Okay, so what they're trying to do is get money quickly, essentially, to be able to fund a project or something that they need to raise additional money for. So they sell that debt essentially to the public. Okay, and then once they finish their project, you get your money back, so your initial investment, plus a little bit of extra thank you money. Okay. Those, again, kind of like stocks. You can invest in really stable ones that if it's a government bond, usually they return your money, right? With the business ones, you can get into that really stable companies, the more volatile companies, right? And they could be a little bit more risky. So then you can combine bonds and stock investments, right? So now you have bonds, which are a little more stable. Stock investments go up and down. Bonds are also for like a guaranteed amount of time. You typically are buying them for like 2 years, 3 years. So there's more stability in that and an endpoint. Stocks, I mean, you can hold them for as long as you want. You can hold them for as short as you want, right? Like there's a little bit more unknown. So that's kind of what, when we talk about diversification, those are kind of the big areas that we're talking about. And also the types of stocks, right? So is it a technology one? Is it real estate stocks? Is it energy, right? All of those have a different risk profile too. So balancing that mix can also balance out your return.
I think as another layer on that, there can be investments that have groups of stocks or groups of bonds or a mix of all of the above or any of the above. So there could be, you could purchase shares of an investment type that has shares of almost all the major stocks, for example, and it just sort of tracks the market performance over time. So if the market as a whole is doing well, your investment could be doing well. If it's not doing so well, maybe that's not doing well either. But so you can look at it like from a micro, from a macro, like there's layers. So layers on the basket.
There is. Well, and with those too, so like an index fund is typically what we would call something like that. There's a couple other terms for it. But so like an index fund, if we use the example of the S&P 500, okay, so that's the top 500 companies in the world and the US, it depends. Those companies are big, they make a stable return, you tend to do pretty well, right? If one of those companies just all of a sudden crashes, usually they just remove that company and replace it with another one. So when you invest in things like that, you're automatically kind of diversifying, but also creating a little bit of stability, right? Because your eggs aren't all in that one company and they're typically going to remove it and replace it. That's not always the case. It depends on the index fund. It's important to do the research, but that can be a way if you're really nervous about stocks and stuff, could be worth talking to your financial planner or researching those a little bit and having an understanding. Same with bonds. You can buy chunks of bonds. So it could be a mix of government and business. Kind of helps to even out that risk factor.
Like this probably goes with the groups of funds thing. So like one common way that investments are packaged or grouped together is by a target retirement date. So that kind of comes back to the portfolio and diversification. If you are like, I know I have to have a 401k. This seems like a good idea. I know the year that I'm going to retire. So there's a target retirement date of 2070, for example, is when I'm thinking of retiring, not me personally. But like, for example, then you would be like, okay, just invest everything into that target retirement fund. And that will choose a level of risk that is deemed generally appropriate for you for that time period of investing. And then as you get closer to retirement, it will change the investment mix to be less risky and probably a lower rate of return, but in exchange you get more security and stability in it too. So like that's another kind of consideration if you're just getting started or would like to simplify things a little bit.
And that the same, our 401k picking low risk, high risk, moderate risk. If you do any of the robo type investors out there where you just want something else to deal with it, you don't want to be responsible for picking, it sometimes is as easy as that, right? You can pick, do I want a lot of risk? Here's my goal. They typically ask you a bunch of questions, and financial planners do the same, right? They're going to say, James, what's your goal? Well, I want to retire with $1 million. Okay, great. What's your risk tolerance on that? I don't have any risk tolerance, right? So they're going to tailor everything that they do. Okay, well, this is what we'd have to do to reach that goal. It's always good to have those people in your pocket.
How about the people that feel like they don't have enough money to invest?
I think you have to look at why you feel that way. Is it truly because you are unable to pay for other things, or is it because you really only have $100 left after you've saved and, spent on your other stuff and you have a little bit of extra cash? There's so many different ways that you can invest. So you can invest in buying whole stocks, right? Stocks all have a different price. Some are $5, some are 99 cents, some are $1 million, right? You can also do, like dollar cost average investing. So typically if you have $100 extra a month, there are companies that allow you to buy pieces of shares, not a full share. So you invest $100 until eventually you buy a whole piece of that share, right? And so you can do that. So even if you have a little bit of money, you can still invest it and make it work for you. So I think that you can invest with $10. I mean, there's examples out there where you do that for 20 years and you have $1 million. Like there's lots of different options out there.
It goes back to our previous podcast where we talked about spring cleaning and maybe spring cleaning your finances to see why you feel that way or what changes you can make if you really wanted to invest.
And what the goal is for you. If you had that $100, it could be investing it and just kind of seeing what happens. It might not be your retirement fund. You have to look at what your goal is for that too.
Are investments something that is like a step up or a step sideways in a different direction than
than savings.
Well, like you have to get your emergency fund first. Like investments are not for a person who does not have an emergency fund. So like,
Absolutely.
I wanted to ask that and be like, is there a group of people that should not be thinking about investments?
Yeah.
But like that doesn't sound very positive, so.
I think that there is steps you have to take before you're in the financial position to invest. You have to have that budget. You have to have control over credit cards and debt. Don't go into debt to invest, right? Like that's something we want to avoid. We want to have that emergency fund, whatever that picture looks like for us. If it's $1,000, 3 to 6 months worth of income and expenses, whatever that looks like for you. And we also want to have that little bit of like slush fund set aside. So it's not for emergencies. It's just a little cushion if we overspend on something, right? Or if an expense comes up we really want to do. So you really have to have that stuff in place first and have consistent payments on bills. And you have to have that stuff, the bare minimum kind of worked out. After that, if you still have extra money, I put in kind of quotations, right? That's when you can start investing because you've done all the things to eliminate as much of the risk of putting your money into an investments and losing some of it as you can, is what it truly comes down to, right? And while the return might seem great, where you say, I'm not going to put it in that savings account because I can earn 100% return on that new stock. Yep, but what if you don't? Right? So that, I think the answer is yes. Like you should have the basics down and be in a position where if you choose to put that money into an investment, you're okay taking that risk, right? Like that's not the money you're depending on for everything. And aligning with the goals, is it retirement that you're investing in? Okay, you've got longer term, but what are you investing in? And can you risk losing that money and not having it again?
Yeah, get your priorities straight, I guess you could say. And I feel like we say this for a lot of topics on the Money Donuts podcast, but do your homework, right? Like you have to be willing to put in some time on the front side and commit to figuring things out a little bit. And yes, you can come and talk to someone or work with a financial advisor or other professional who can help guide you through it, but you're driving the bus in some sense on those too, even. So,
well, and even if you are working with a professional, it's good to have a base understanding of why you're working with them too, right? So you don't have to know everything, but just knowing a little bit about, okay, I know there's a couple different accounts. What do those mean to you? Finances are personal for everybody. What I do is very different from what Alexis is going to do, which is very different than Steve, right? We can talk about it all day, but...
Yeah, I think we just scratched the surface. So it's a good place for me to pitch this podcast, watching this video, subscribing to our channels,
using Enrich,
following our Instagram page, our new Money Donut Instagram page.
Oh yeah, we have an Instagram.
So that's fun. Thanks for talking. Thanks for listening.